This is Alan Bush with the Daily Financial Futures, Thursday, May 7th. Starting out with the stock index futures, we did see some pressure yesterday. Much of this linked to comments from Fed Chair Yellen when she indicated that stock valuations appeared to be elevated. Today we did come under a little pressure this morning. However, now starting to see some recovery. Still believing that the long-term trend is higher, and any breaks should be used as buying opportunities for stock index futures. Now, moving over into the currencies, we had the dollar index yesterday breaking a triple bottom to the downside. So a lot of sell stops were taken out. However, we are seeing some recovery today, and this may be linked to some flight to quality buying in light of what appears to be a worsening financial situation for Greece. Longer term, though, we do believe that the dollar index will continue to work lower, and this is a trend that will probably last for several months at least. Also, with the Greek situation more in focus, we are seeing some pressure coming into the euro currency. However, this is likely to be short-lived, and I think that we will probably see some recovery, at least a partial recovery, later today. Also, some flight to quality buying coming into the yen. Now, from time to time, the yen is seen as a flight to quality vehicle. So some gains in that currency this morning. However, the currencies we are paying most attention to are the commodity currencies, the Canadian dollar and the Australian dollar. Now, both of these currencies have increased in value over the last 3 weeks or so quite dramatically, but some pressure today as crude oil prices now coming under some selling pressure in the morning hours. Also, a little extra weakness coming into the Australian dollar after employment data in Australia coming in a bit on the weak side. However, I would not be surprised to see good recovery gains this afternoon in the Canadian dollar and the Australian dollar. In longer term, it does appear that these two currencies are the best longs. And of the two, we favor the Canadian dollar a bit more than the Australian dollar. Now, moving over into the interest rate markets, a lot of pressure yesterday. This after Janet Yellen saying that when their benchmark interest rate is increased, that there could be a jump in long-term yields, so that adversely affecting the 30-year bonds. However, flight to quality buying coming in today in light of the Greek situation, so good gains in the bonds. Longer term, though, we're still more likely to stay a bit on the neutral side. For one thing, futures have not performed that well when we did have bullish news. Some of this weakness could be linked to increasing long-term yields in European debt. So for right now, stand aside in the treasuries, but I would continue to focus on the long side of stock index futures, especially on weakness, and the long side of the Canadian dollar and the Australian dollar, also on weakness. So good trading, everyone. And remember, once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.